Hi, everyone. Welcome. We are about to begin our webinar very shortly. We're very excited to share all the content that we have with you. Just give us a few moments while people are still filtering in. Thank you. I see there's a hand raised. We do have the chat open. So if you do have any questions, feel free to drop in your question in the chat functionality and we can answer from there. People are still flowing in, so we have just another minute before we will begin. Hi, everyone. As people come in through, we do have a lot of very interesting content coming in. So I would like to begin on time. Thank you, everyone, for everyone who's just joined us. And let's begin. Welcome to our webinar on navigating the path to sustainability reporting. We're very excited to have this specifically to decode the EU reporting implications for APAC companies as yourself. This webinar is co-hosted with Terrascope and CDP. And we have a very special guest here from Thoughtworks, Amanda, who will be sharing some personal experiences on someone who's gone through this journey herself. Before we begin the webinar, some housekeeping to share with you. This webinar is being recorded, so we will be sharing the recording of this as well as the slides that will be shared today with the participants after the call over an email. We also encourage questions. We want to make sure that we answer any lingering questions that come up. So feel free to ask them at any point in the webinar. We do have a final section on Q&A for about 15 minutes, but I request that you put in any questions that you have in the chat bubbles on the right. We will take note of it, try to answer it within this session. If not, don't worry. We'll give you all the answers to it in that email with the recording of the session as well. And finally, a feedback survey will be showed to you at the end of this presentation, as well as shared over the email. We welcome your feedback and implore you to give us any suggestions to improve our future offerings. Finally, I'd like to introduce you to everyone here that we have here for you. Firstly, myself, I am Sanya. I'm part of the business development team here at Terrascope, and I'll be your moderator for today. And I'm very excited to introduce to you our three speakers for today. Firstly, we have Ching, my colleague here from Terrascope, who is the climate regulations and reporting specialist at Terrascope. Secondly, we have Guillherme. He's the Senior Corporate and Policy Manager for CDP. And finally, we have Amanda, who is the APAC Sustainability Lead and the Global ESG Reporting Lead for Thoughtworks. She comes to us with 20 years of experience in program management, change management, digital transformation, and sustainability. Thoughtworks actually has a very dynamic relationship with both Terrascope and CDP. Thoughtworks uses the Terrascope platform to actually measure and manage their carbon emissions, and also they voluntarily disclose their carbon emissions to CDP or the Carbon Disclosure Project. We're very excited to have the three of them share more about their experiences and the work that they've really honed in on. Finally, I just wanted to give you a quick introduction on Terrascope, as it might be new to some of the participants here. Terrascope itself is a managed SaaS platform and an end-to-end decarbonization platform that can help you measure and manage your carbon emissions. So we can help you in your sustainability journey, no matter at which point you are. If you have further questions on Terrascope, please feel free to reach out to me. I'll be sharing my email ID as well as my LinkedIn at the end of this presentation. With that, let's begin with the webinar. Just a quick recap on the agenda that we have for today. We'll be beginning the webinar with the presentation by Ching, who will take us to the basics, right? The who, what, how of CSRD and ESRS. Followed by Guillherme, who will hone in on what this actually means for APAC companies and with a real focus on value chains. And finally, we have Amanda, who will be sharing more about her personal experience and the experience in the corporate world as a Thoughtworks sustainability reporting executive. And finally, as promised, we will leave a good 10 to 15 minutes for a Q&A session that we'll be taking over from your questions that come up on chat. With that, I'll pass it on to Ching for the first session that we have here.
Thank you, Sanya. Good evening, good afternoon, good morning to our attendees. I'm Ching, and I'm Climate Regulations and Reporting Specialist at Terrascope. Next slide, please. So let's begin with a quick poll so that we can get to know each other better. How knowledgeable are you regarding the CSRD and ESRS? The options are on the chat column, and we will wait for a few moments for all of you to select your answer. Great. So we can see that we have got a good mix of different people with different levels of experience with the CSRD and the ESRS in your audience. I think a lot of people know what acronyms stand for, but really not much else. There are quite a significant number of people who are familiar with the topic, but wouldn't consider themselves to be experts. And I don't see any experts, or at least self-declared experts, in our audience today. But no worries, my mission today really is to help you to understand the CSRD and the ESRS. Next slide, please. So the CSRD, or the Corporate Sustainability Reporting Directive, is a new EU regulation which requires companies to disclose information regarding their corporate sustainability performance. Companies need to report in alignment with the ESRS or the European Sustainability Reporting Standards, which is a newly created reporting standard, specially created for the CSRD. Now, it can be quite overwhelming to understand the CSRD and the ESRS because there is so much information. Hence, my aim today is to really simplify matters and help you begin to understand the CSRD and the ESRS by answering the following 3 questions. First, is your company affected by this new legislation? Second, what are you expected to report? And finally, how can you prepare your company for reporting? Next slide, please. Let's start by asking ourselves whether our companies are going to be affected by the CSRD. Now, this seems like a simple question, but the answer isn't necessarily straightforward. In my view, there are 2 groups of companies which need to be prepared for the CSRD. The first group, which is on the top row of your screen, comprises companies which are directly covered by the CSRD. Even though your company may be based in APAC, it may still be subject to EU regulations. Within this group, there are 3 categories of companies which must comply with the CSRD and submit CSRD reports to the European authorities. First, if your company has a large subsidiary in the EU, this means meeting at least 2 of the following 3 criteria: more than 250 employees, more than 40 million euros turnover on an annual basis, or more than 20 million euros total assets. These are considered large companies according to the CSRD. Second, if your company has a subsidiary with debt or equity securities listed on a regulated market within the European Union. And third, if your company has an annual EU revenue of more than 150 million euros and have either a branch in the European Union with turnover exceeding 40 million euros or a subsidiary in the EU that is a large company or a listed SME. No worries if you haven't caught that. We will be sending slides with more details after the webinar. There is a second group of companies which you can see on the bottom row. These APAC companies are indirectly affected by the CSRD. They may have limited or even no operations in the EU, but have business relationships with EU companies. Because the EU companies are subject to CSRD requirements and must disclose their value chain information, they will likely give order priority to suppliers with better ESG disclosures when making purchasing decisions. So it's really important for APAC companies that have relations with EU companies to position themselves well for this upcoming legislation. Guillherme from CDP will talk more about the CSRD and value chain compliance later on during this webinar, so stay tuned for that. Next slide, please. The second question which we need to ask ourselves is, what is my company expected to report? Here on the slide, we see an overview of the ESRS, or European Sustainability Reporting Standards. As I've mentioned earlier, the CSRD requires companies to do their sustainability reporting in accordance with the ESRS. On the left of your screen are the sector agnostic standards. These are applicable to companies from all sectors, and within this, there are cross-cutting standards as well as topical standards. Cross-cutting standards comprises the ESRS 1 and ESRS 2. The ESRS 1, or general requirements, sets general principles to be applied when reporting according to the ESRS. It does not itself set specific disclosure requirements, but just the general principles. ESRS 2, or general disclosures, specifies essential information to be disclosed. In other words, ESRS 2 is mandatory for all companies that are covered by the CSRD. Next, we have the topical standards. There are 10 of these standards spread across the environmental, social, and governance domains. Unlike ESRS 1 and ESRS 2, all 10 topical standards are subject to a materiality assessment. This means that companies only need to report on standards which are material or relevant to them. Companies can choose to omit reporting on topical standards that are not material to them. On the right of this screen, you can see 3 different types of standards in gray. These are standards for specific sectors, standards which are simplified for small and medium-sized enterprises, and standards which are simplified for companies outside the European Union. These standards are still being developed, but it's worth noting that these standards will largely follow the framework and logic of the sector agnostic standards. Next slide, please. So here I want to dive deeper into the ESRS E1, which is the topical standard on climate change. Now, in my previous slide, I said that companies can choose to omit reporting on topical standards that are not material to them. So I often get asked, if a company has decided that climate change is not material to them, can it choose not to disclose about climate change? Well, the short answer is yes. Companies may choose not to disclose about climate change if they have concluded that it is not material. However, if they do so, they have to provide a detailed explanation on why they have reached this decision. This is different from the other 9 topical standards. If companies decide that any of the other 9 topical standards is not material to them, they can, but they're not required to explain their decision. So it is really clear that the EU has applied more stringent rules for climate change compared to the other 9 topical standards. And this reflects climate change's wide-ranging impacts across the entire economy. Now, if we dive deeper into ESRS E1, as you can see on the screen here, we can observe that the disclosure requirements are organized across 4 pillars. Now, many of us will be familiar with these 4 pillars because they follow the TCFD, or Task Force on Climate-Related Financial Disclosures. The 4 pillars are governance, strategy, impact, risk, and opportunity management, as well as metrics and targets. Now, for each of these pillars, the ESRS E1 specifies disclosure requirements. For climate change, there are a total of 12 disclosure requirements. We don't have time to go through each of these in detail, but I want to talk a little bit more about 2 of these disclosure requirements over the next 2 slides. Next slide, please. So on this slide, let's dive deeper into E14 disclosure requirement, which is on targets. Within E14, there are many specific items which need to be disclosed by companies. I have listed some of these items on the slide, but the ESRS actually specifies more items than what you see on the slide. I would like to highlight 2 observations here. First, we can observe that the disclosure items comprise a mix of quantitative and qualitative or narrative type of items. Second, the ESRS is very detailed and prescriptive. So for example, if you look at the second row, you will see that companies will need to state whether the greenhouse gas emission reduction targets are science-based and compatible with limiting global warming to 1.5 degrees Celsius. This means that companies will need to state which framework and methodology was used to determine these targets, including whether they are derived using a sectoral decarbonization pathway and what the underlying climate and policy scenarios are, and whether the targets have been externally assured. So there is a lot of detail, which I've not written on this slide, that the ESRS prescribes. And it's very important for companies to be prepared for this level of detail as specified in the ESRS. If we move to the next slide, let's dive deeper into E16, which is on greenhouse gas emissions. Now, as you can see on the slide, it is unsurprising that E16 is heavily skewed towards quantitative reporting. Now, again, we don't have much time to talk about this slide, but I want to bring something really interesting for your attention. If you look on the 4th row, it's interesting to note that it's not good enough to disclose your company's Scope 3 emissions. Now, of course, for many companies, it is already very challenging to disclose Scope 3 emissions. But the ESRS goes further, and it requires companies to disclose the percentage of emissions calculated using primary data obtained from suppliers or other value chain partners. In other words, the EU emphasizes transparency and data accuracy. So it is important for you to be prepared for this as well. Next slide, please. So I hope that you are now more familiar with the CSRD or ESRS. If you have any questions, please type them in the chat and we will address them during this session. But before we move on to the next section, let's pause for another quick poll. How prepared is your organization for the CSRD or ESRS? Right, so we can start to see that the overwhelming majority of our attendees here do have some form of sustainability or climate reporting in place, but they are not sure whether this is adequate for the CSRD or ESRS. There are also some companies which are not prepared at all. They don't have sustainability or climate reporting in place. Not to worry, CDP, Terrascope, we are here to help you on this journey. If we can move to the next slide, please. So in this final part of my presentation, I would like to suggest some tips on how you can help your company prepare for the CSRD. So my first recommendation is to perform a materiality analysis and a gap analysis. You are probably already familiar with a materiality analysis, which identifies the sustainability topics which are relevant to your company. On the other hand, a gap analysis looks at your company's existing sustainability disclosures to discover the gaps in existing policies, actions, or reporting outcomes. These are areas for improvement, which you can then work on. And there are external tools which you can use to help you with these. If you'd like more information regarding these external tools, please reach out to us. Following a gap analysis, I would recommend working on plugging these gaps. If your company is lagging behind in terms of having processes to identify climate-related risk and opportunities, then start addressing this. I would suggest 2 action items for companies to put in place to enable these efforts. First, formulate training and raise awareness across your entire organization on the policies, actions, and reporting requirements. Second, recruit or cultivate sustainability specialist talent. Now, this is really important because, as we have already seen, the ESRS's reporting requirements are very detailed. And if you're already struggling with disclosures such as TCFD, you will definitely need specialist talent to do well in this new enhanced reporting regime. When you're working on your areas for improvement, the quantitative part, so for example, setting targets or tracking your emissions, can be quite challenging. The ESRS requires companies to disclose scopes 1, 2, and 3 emissions data, and we know that scope 3 emissions are notoriously difficult to measure. In addition, as I mentioned earlier, the ESRS requires transparency on the accuracy of your data measurements. So I would strongly suggest that companies make use of automated software here. The CSRD also requires disclosures to undergo external assurance. This means that if you are using a software solution to measure and disclose your emissions, you'll want to choose one which facilitates rather than hinder the assurance process. I've talked about processes and capability building so far, but underpinning these efforts is ambition. On the right-hand side of your screen, under the enhanced reporting regime, the risk of not doing sustainability reporting well are higher. Doing reporting well takes time and effort, and you need to achieve buy-in from leadership and your entire organization to succeed. This means putting in place strong internal communication and building a culture across your organization which values sustainability. And on this note, I'm really excited and looking forward to hearing from Amanda because she has gone through this process with her company, Thoughtworks. Next slide, please. So on this slide, I want to talk more regarding my earlier point of using automated software to help with the quantitative aspects of CSRD reporting. There are many software solutions which are available today, but what should you be looking for? What are the criteria which you should be putting in place to select the most appropriate software? I would like to propose 4 important considerations. Sanya, could you just click on the animation? Yeah. First, you should expect your software to be transparent. We have seen that the ESRS is not just asking companies to disclose Scope 3 data, but to disclose the accuracy of their Scope 3 data. So transparency is really important under this reporting regime, and your software should enable you to do so. Second, you should expect your software to save you significant time, effort, and costs. At Terrascope, we are proud to share that our customers were able to complete their greenhouse gas emissions measurements up to 5 times faster using our software compared to conventional manual methods. Third, as I've mentioned in the previous slide, you should expect your software to facilitate the external assurance process and not hinder it. And last but not least, your company may be required to submit different disclosures to different entities. For example, your investors or financiers may ask for CDP disclosure. If your company is based in Singapore, your stock exchange is likely to require ISSB disclosures in the near future. Or if your company is operating in Japan, You may be subject to domestic legislation, such as the Promotion of Global Warming Countermeasures Act, which requires greenhouse gas emissions reporting, but in a different way compared to the ESRS. So you should choose a software which maximizes the efficiency of meeting these various disclosure requirements. Next slide, please. So this is just a quick snapshot of the various disclosure requirements across a few countries in APAC, Australia, Japan, and Singapore. And what's really interesting is that moving forward, all of these three countries will very likely implement a mandatory climate disclosure regime that is in alignment with the ISSB standards. So there are some differences between ISSB and the ESRS. So once again, my point to you is choose a software. If you're choosing a software to help you with your disclosures and measurement, choose one that helps you to maximize efficiency across all your different disclosure requirements. Next slide, please. So I've come to the end of my presentation. I thank you very much for listening, and I hope you have deepened your understanding of the who, what, and how of CSRD and ESRS. If you have any questions, please type your questions on the chat, and we will answer them towards the end of this webinar. Alternatively, you are also most welcome to speak with us, and we will be providing our contact details at the end of this webinar as well. Thank you very much, and I'll now pass the time over to Guillherme from CDP.
Thanks a lot, Ching. Can we move to the next slide, please? Exactly. And just a highlight here that CDP has a grant from the European Commission where we do this capacity building work, sort of helping companies understand the implication of CSRD, hence why we have the life logo here in the first slide. So it's part of my role to make you understand better these regulations. And then at the end, if there are any remaining questions, I'm happy to answer them by email. So feel free to contact me. So next slide, please. Yeah, so I just wanted to first, perhaps, can we go back to the back one slide? Funny that it doesn't show. It doesn't show the actual first slide, but it's okay. I'm happy to talk through it. So basically, wanted to highlight the fact that CSRD requires a different approach to sustainability reporting from what most companies are used to. And that is the double materiality approach, right? So some companies will be familiar with the financial materiality approach. And this is the approach that is embedded within the IFRS standards, IFRS sustainability standards, which you might have seen were released by the International Sustainability and Standards Board, which is actually the culmination of a series of standards that used to exist, spread out in the ESG landscape, and they consolidated under the ISSB. And this CDP expects to be sort of the new global baseline in terms of sustainability reporting. So this is the very basic standard that all companies should be compliant with going forward. And then, of course, CSRD represents what we consider sort of the best practice in sustainability reporting worldwide, but because it goes a few steps further. So to highlight then what is the materiality approach at CSRD, we need to understand first what is the materiality approach in ISSB. So the materiality approach in ISSB is the type that looks inward. So it looks at the effects of any sort of impacts, risks, and opportunities within the environment that may have on the company. So companies that are reporting according to financial materiality need to look at the impacts that the environment have on their operations. On the other way around, there's the approach that is embedded within the GRI standards, which is the impact materiality approach. That is looking outwards. So the impacts that the company has on the environment. And then there is the CSRD approach, which is the double materiality approach. And that is the combination of both the financial materiality and the impact materiality. And that means that companies that are reporting to CSRD need to be assessing both types of impacts in their materiality assessments. So now I'm happy to move on to the slide that you see now on screen, which is then you're asking yourself, what does this mean to me? Well, first of all, if you're within scope, just as Ching just presented, you will need to conduct your materiality assessment. There is, and this is important to say, there is ongoing work from EFRAG, which is the same organization that developed the ESRS. Which aims to release guidance on how to conduct an appropriate materiality assessment. These materiality assessments will also, as Ching highlighted, need to be assured. So they will need to be externally assured. First, in the first 2 years, limited assurance is okay, and then from 2 years onwards, you will have to provide a reasonable assurance. And these standards for the assurance as well will be released by the European Union by 2026. So there will be a new directive that highlights how assurers need to conduct these assurances. So moving on to how does it impact you? And it's important to understand that, well, if you're embedded within a European value chain, you will be affected by CSRD, independently from you having all the requirements that Ching highlighted, this type of revenue in the EU, how many, if you have a branch or not, etc. Independently, if you are embedded within the value chain, you will be impacted. And this is for both downstream and upstream. So downstream, we're talking if you're a distributor, if you're a customer of a European company, European companies will need information from you. If you're upstream, then if you're a supplier of a European company, European companies will need information from you. So next slide, please. Right. So as said, the information that European companies will need from you will depend on the materiality assessment. So therefore, it's really important that you, as a player within European value chains, do your own assessment of what is actually material for you so that you can inform your stakeholders in Europe. So it is connected to first-tier suppliers, distributors, etc., but it's not limited to that. So if you're second tier, third tier, even fourth tier, actually CSRD asks the European companies to consider those impacts as well and also inform accordingly. So this let's say, sustainability statement that European companies will have to elaborate now, which will be due at the same time as their financial statements, by the way. So there's an interest from investors mainly, but from regulators and policymakers as well, to kind of bridge this gap that sustainability information was then considered not financial information. Rather the contrary, we're seeing with the constant impacts of climate in companies' operations and so on, that actually sustainability information is very financial with very real world financial impacts. So these assessments that companies will do on how material these impacts are and so on will also be in accordance with the ESRS topical standards. So there's two types of ESRSs. There's the ESRS which are general, ESRS 2, which highlights general requirements for reporting. And then you have the topical standards. And then these topical standards look at specific topics such as climate change, biodiversity, water, so on and so forth. So companies will have to do this assessment both on strategic and business model level, so at the ESRS 2 level, but also on impacts, risks, and opportunities in this specific topical standards. So if there is an impact that companies have on biodiversity, their suppliers have, their distributors have, they need to include that in their sustainability statement. Next slide, please. Right. So how will they do that? They will need to describe the main features of their upstream and downstream value chain. So there needs to be an explanation for investors on how their value chain works, where in this value chain the company is located, and the description of the main business actors and the relationships that the company has with them. Similarly, where do they see these impacts, risks, and opportunities to materialize in their value chain? Describing all the material impacts, especially the material impacts on nature, which is something that it's very revolutionary from this year. So companies are very used to talking about climate change, but now we're more and more embedding nature into sustainability disclosures. And then this undertaking, the European undertaking or the APAC undertaking who has operations in Europe will need to respond or provide information on how they plan to respond to these impacts, risks, and opportunities in their value chain. And as well, disclose information on the discussions at the relevant managerial level, let's say at their board level, on how they plan to address these value chain impacts, risks, and opportunities. So it's really a watershed moment where investors are going to have access, in theory, if you're doing a proper disclosure, to really transparent information on a company's sustainability impact. Next slide, please. So what does it mean in practice? Well, basically it means that companies will need to start setting targets according to these. And it means that if you're within a European value chain, they will impact you because they will need to actually report to their investors how they're doing in their attendance of these targets. So under CSRD, companies are required to set targets on all the topical standards, so on biodiversity, social standards, within climate change, and so on and so forth. These targets need to be measurable, outcome-oriented, and time-bound. So European companies will need to do this, or APAC companies operating in Europe. And in order to comply with these targets and comply with everything, as we've seen, they will need information from their value chain. They will need to have new policies in place. And these include also Scope 3 targets. So Scope 3, let's say climate change mitigation targets, including at the category level, so as per Scope 3 category. So this will all be embedded in their sustainability reports. Next slide, please. So why does this matter to you? Basically, it matters because European and APAC companies with significant operations in the EU will have to require this information from their suppliers. And Ching has hinted at this, that there's also a requirement for actually data accurate reporting, so that there's incentives in place for companies to gather, for example, Scope 3 data that is reliable, that comes straight from the source, and that is not based on, let's say, proxies and so on. So, but there's one caveat that is important to mention, that because there's an understanding from policymakers that this is really a watershed moment where companies are having to implement new policies, change the way that they do business, have new procurement policies in place. place, they gave this 3 years of, let's say, a phase-in period where European companies and APAC companies significantly operating in the EU can only report what are their reasonable efforts to gather this data. So for the first 3 years, the legislators will let it pass if companies don't have as accurate data as they wish, because they understand that these 3 years are sort of a period of adaptation. However, it's very important, and we know how difficult it can be to gather accurate data. It's very important to start doing this process as early as possible. So to start doing your assessment of scope 3 impacts and so on and so forth right now, so that by the time that this 3-year period ends, you're actually prepared to report this data. So as said, these companies which operate in Europe will need this data, and it will be embedded in their procurement policies. So if you're, for example, a supplier of an European company, you will be requested to provide this data. And it's really important that you do it, because if you don't, there will be a competitor that will be able to provide this data. And this means that eventually you could be excluded from a value chain if you don't comply with this. So we highly encourage companies to start working on this as soon as possible, because as said, it is vital for the continuation of your normal relationship with companies operating in Europe. I believe there is, one slide now on the overlaps between the CDP questionnaire. So those of you that have been reporting to CDP are fairly prepared to respond to the ESRS E1 standard on climate. However, as said, this is a really different moment in sustainability reporting. So the CSRD introduces a series of topical standards, expands significantly on them, on biodiversity, water, and so on. So this is an area that CDP itself is working on. We're significantly altering our questionnaire for 2024. We are adapting the questionnaire to the best practices out there. We will include further data points that are, let's say, embedded within ESRS, and we will continue to do so over the years. But at the moment, this is the overlap that we have with ESRS E1 climate, and we will be releasing a further detailed mapping for E2 to E5, the other ESRS topical standards, where you will be able to see what is the information that you already report to CDP that you can leverage in your sustainability statement under CSRD. So with that, I'm happy to then give it to Amanda, so that we also maybe have some time left for questions at the end. We will share this presentation with you, and there's a bunch of links here at the end that help you understand further, if you so wish, the European regulations. Over to you, Amanda.
Well, thank you so much, Guillherme and Ching, for giving us such great insights to what's to come. It's actually quite scary the more I'm hearing about it, but it's good that we're starting now and learning about it. So thank you to Terrascope for giving me the opportunity to present today. As a quick introduction, I'm Amanda Ting, pronouns she and her. I'm based out of Sydney, Australia. I've been at Thoughtworks for more than 15 years, played a number of different roles, and currently in the roles of APAC Sustainability Lead and Global ESG Reporting. About 3 or so years ago, Thoughtworks committed to the Science Based Target Initiative, or better known as SBTI to most. And I had the great pleasure and opportunity to kick off and manage the journey to get our SBTI climate targets validated, which thankfully we achieved earlier this year. And also been heavily involved with the CDP disclosure for the past 2 years. So I can honestly say I've had some fun, interesting, and most people would know, probably very frustrating times with sustainability reporting. So I'm hoping I can share a little bit of that experience with you as well today. Next slide, please. There's sort of three areas that I'll talk about today. Firstly, we'll talk about some of the challenges that I've experienced, and also my key learnings from that. Finally, I'll just end with a couple of examples of how sustainability data is used at Thoughtworks to influence our supply chain decarbonization. From the polls, it seems that the audience have a reasonable experience of maturity in this space, but I'm hoping that what I share today is something that you can actually take forward and be helpful for the others who haven't really been on this journey as yet. Okay, next slide. Thank you. Data, we've talked a lot about data. That is extremely critical in sort of moving forward with our climate goals and how to address them. And in most sense, you start off with your baseline, you look at what that reduction path will look like as when you set the targets, and being able to track that progress along the way. And you sort of hit these sort of four, in my view, four challenges or four areas of challenges. Consistent data. If you've experienced this, try collecting data from all scope areas and categories. You'll realize that, in most cases, it's inconsistent. It really varies on who you're collecting it from, where, and what type of data. And even the way we categorize that data in comparison to what's expected of it is also inconsistent. So worst case, in some cases, we have to extrapolate and estimate. The accuracy of the data, as we're all familiar, it's probably we start off with spend financial data because it is more readily available. But ideally, we have to start using more of that activity data for the level of accuracy that we want to be more accurate in our reporting. And auditability, a trail of that is important. Being able to, from the point of collection, how you manage it, you calculate it and report on, there needs to be very clear visibility of the process for this reason. And as we spoke about for, most half of this call is around compliance, right? More and more we're seeing these legislations in place in order for us to disclose our data publicly. And that all comes with challenges. Thank you. And next slide. So what did I learn in the last, probably 4 years of this experience? Importance versus urgency. And I'm sure for any company out there, there's so many competing priorities, right? Everything's important, everything's urgent. And in some ways, I don't know, everyone says, it is important, but it's not always considered urgent. So how do we change that? How do we turn this around, right? As we've heard today, compliant reporting is helping us, shift that. And with the recent, economic situation that we're in, having conversations and using cost optimization and building in this operational efficiency into our business model, it does help create a sense of urgency for companies. So ultimately, in most cases, carbon reduction does equate to cost reduction or optimization. Okay. Organizational buy-in. So we know that the data that we collect comes from all over the business. So in some cases, finance, some cases from procurement, from our technical arm. And it's not orderly and not always accessible. And sadly, in some cases, no data at all. So as Ching has mentioned before, it's important to start with education and creating that awareness around the topic. Not everybody understands and is an expert in this space. So where we have data, we use that and we share that with our stakeholders to be able to show the impact it has on the business, both from a cost as well as an emission perspective, where possible. I believe that speaking that common language with your stakeholders does help greatly. Okay, the third point, setting your expectation. It takes time. Sustainability reporting takes time. And it is a bit of a roller coaster, right? Because in some cases you get big wins when you get everything in order. But there are a lot of low points where you start seeing the gaps. So I would say, on a personal note, set your expectations low, not no, just low. And, it may seem impossible, but after a while, as you move forward, it is possible and it can only get better and surprisingly easier. Okay. And the last point I wanted to make is don't wait for perfection. And I think Guillherme has just highlighted that. You need to start somewhere. Your data is never going to be at that level of quality, but being able to start gives you that sort of advantage to, you know, seeing where the gaps are, being able to kind of pivot and work through it. So it is very important, as we mentioned as well, that you need to be able to explain it. So if you can't get the actual data, be able to articulate it and why, and look at areas of where you can improve. And so I would say put on this mindset of getting better every time, being able to measure, you know, learn from that, and consistently evolve and improve. And I think that 3 years, as we spoke about, is going to give us that opportunity to do so. Okay, next slide. So just a couple of examples of how we've used some of the data internally to help influence our supply chain. So next slide is, so there's no surprises. Most companies have the largest emissions in our scope 3. For us, it's really in our purchased goods and services as well as business travel. We've started looking at our purchased goods and services category more closely. Laptops is one of our highest emissions and the main tool for us as a consulting company. We were lucky enough that we have supplier data that gives us activity data to analyze on how we will be able to kind of reduce our emissions. And what we have been doing is sort of building out these scenarios with some of these parameters in mind. You know, we talked about size. You know, in most cases, people associate larger laptops with higher emissions. More and more, we're seeing new models coming up with more efficiency built into it. Do we continue to use brand new versus refurbished laptops as an option? So there's all these, you know, different examples and different parameters that we can play with to be able to make more informed decisions and be able to build that into our policy as well. Okay. The next example is around cloud computing. It is one of our higher purchased goods and services emissions. Within our internal technical operations team, we have a particular product team that have been able to apply green software and cloud optimization principles. Bit of a plug here. At Thoughtworks, we have our cloud carbon footprint, CCF, which is an open source tool that we use to be able to do the cloud optimization view. And with this, the team have over that period of time achieved a cost reduction of 46% and emission reduction of 60%. And we're talking one team. You know, there's several teams that are slowly building this expertise into the function in order to achieve, you know, some of these great results. I know there's only 2 examples. I'm running out of time, but you know, basically that's all from me. Thank you so much, and over to you, Sonia.
Thank you so much, Amanda, and Ching and Guillherme. Thank you so much for all your sharing. It's been really nice to hear from you, and especially see all the specters, all the different players that have come into play. Just quickly, I want to give everyone an opportunity. If we have the meeting chat on the right, so if you have any questions, please feel free to drop in the questions now, because we'll be going into the Q&A round. We have I think 1 question that we'll be addressing now, but while we get that through, maybe if you have any more questions, yes, please feel free to put in the chat. And like I mentioned, if we can't get to it today, even if you drop it down here, we'll respond to it later on over email. Perfect. Guillherme, I see that you have a raised hand.
Yes, I just wanted to highlight there's a question here on the chat by Lei Soon on whether or not there's a recommended methodology for materiality assessments. And I want to highlight that this is a work that is currently underway. So EFRAG is currently working on its implementation guidance for materiality assessments. And this will be a resource that will be made available for companies. So please watch the EFRAG's website space as they will release this sometime in the next months. So either the end of this month or end of next month. So this will provide you with an overview of what is expected from you in terms of materiality assessments. And I see there's a further question on, will this include a guide for double materiality? I just want to highlight that the whole implementation guidance is actually based on the double materiality principle. So it will incorporate all the principles of double materiality, highlighting how do you incorporate that in your materiality assessment. There will also important to highlight, there will also be a implementation guidance for value chain, which will be released at the same time, and it includes highlights for companies that depend on gathering this information from their value chains. So in this in this implementation guidance, there will be then also highlights on what are the information that is expected to be gathered around value chains, and how are you supposed to gather this information. This is all in draft, and currently it's all in draft form. You can, I believe, also access the draft versions of it in the IFRAG's website, so you can already sort of start preparing. But again, these draft forms are always subject to change. So also, wait for the final version to do it right. But if you want to already start, assessing what you need to do, I can recommend checking out the draft version.
Thank you. Thanks a lot. While we get a few more questions, we have a question from earlier by Michael. And this would be directed to Ching, and this is it's quite specific to the APAC region. And the question is, how compatible is CSRD or ESRS with Malaysia's SCDG, which is the Simplified ESG Disclosure Guide by the Securities Commission, or with SBTi? Pass it on to you, Ching, to go ahead with this answer.
Thanks, Michael, for the question. So I think there are two parts to your question. So one is regarding the simplified ESG disclosure guide, and the other part of your question is with SBTi. So these two are quite different, right? And I'll go into some detail. So for the simplified ESG disclosure guide, it's, as the name suggests, it's really very simplified. So it's a good starting point for especially SMEs in Malaysia to start adopting. And as Amanda shared, the whole sustainability reporting, the whole sustainability transformation journey takes many, many years. So my recommendation is start complying with the issues that are mentioned in the SEDG first. But as I shared in my presentation, the ESRS is much more detailed, it's much more prescriptive, and it requires a lot more attention to detail compared to what we are used to today, not just in Malaysia, but in Singapore and across APAC as well. So I think how we should view it is start with the SEDG, but don't stop there. Continue to press forward to be more ambitious in terms of setting policies, implementing measures, and reporting more detailed disclosures for your company. So that's the first part. The second part is about SBTi, so the Science-Based Target Initiative. So the SBTi basically helps to validate whether your targets, your greenhouse gas emission targets, are science-based or compatible with global targets to limit global warming. So in this case, as I've shared earlier, the ESRS actually has a question that specifically asks companies whether their targets are aligned with the SBTi. So if you already have a target that is SBTi validated or are in progress to have a SBTi validated target, that's a good step. And it means that when you are eventually reporting against the ESRS standards, your disclosures will be viewed more favorably by your stakeholders. So thanks, Michael, for the question.
Thank you, Ching. We have one more question, but we are, I think, running out of time. So let's, unless Ching, do you think you can take that on now?
So I think the question is from Joey.
Yes.
Joey is asking whether one of the entities, I suppose a branch that is located in the EU, meets the requirement for large companies for CSRD, but it's not listed. Well, the short answer is that if you are defined as a large company and you are a branch, then you will be subject to the CSRD requirements. And that means that you have to start preparing your company for disclosures eventually. You will likely only need to do so much later on. I think starting from financial year 2028. But it's never a bad thing to start preparing early. And as Amanda shared earlier, it takes really a very long time to be prepared fully for the ESRS. Yeah, you will probably be affected. But if you want to go into more detail, please share more information regarding your entities with us, and we can follow up offline separately.
Thank you. Thanks, everyone. So I think that closes off the session. Like I mentioned, we'll be sending a recording of the webinar along with the slides and a recap of all the questions that were asked over here. As the last points to bring up, if you have any further questions, we do have the QR codes to all of our LinkedIn profiles. So feel free to connect with us, ask more questions. I think everyone in the industry loves just connecting and learning from each other. So feel free to grow in this industry together. I have one last question and request from you. There's a QR code here to a feedback survey. Just a few questions on the content that's come together right now, on obviously suggestions that we can take to improve the future content that comes on. So if you could take a few seconds to just go onto this feedback survey and see what but we will also be able to send this to you over email later on. So if you can't access it now, you can do it later as well. With that, I'd like to say thank you to our speakers for the really engaging content, and also to our audience for engaging with us and with all the questions. And thank you, everyone, for this great webinar.
Thank you.
Thank you. Thank you, everyone.
Thank you, everyone. Have a nice evening. Ciao, ciao.